what would be the immediate effect for the crypto industry of the SBR bill getting passed? Well, the first thing that is going to happen is the Bitcoin price is going to go insane. Whatever target price you have for this cycle, you think Bitcoin is going to 200,000. Well, that's going to at least happen overnight. And, probably Bitcoin is going to like $1 million in short order.
And if in that scenario, Bitcoin becomes sort of de-risked as a sovereign asset, then like $1 million is the floor. Now you're talking about Bitcoin, reaching and then surpassing parity with gold. That could happen, in the next 4 years.
All right. Welcome back to the Bitcoin Policy Hour, a weekly podcast hosted by the Bitcoin Policy Institute. I'm your host, an associate with BPI, and joined weekly here by my colleagues, Matt Pines, BPI's executive director, and Zack Shapiro, BPI's head of policy. Going to continue the Bitcoin Policy Summit shill here. We're running a special offer this week for the listeners of today's episode. We're pleased to offer 21% off your ticket if you sign up for the Bitcoin Policy Summit before Friday, May 2nd at midnight. Visit lu.ma/BTC Policy Summit and use code BTC Policy Hour. Pine's going to kick it over to you here. Why should the plebs come to DC?
Yeah, no, I've been relentlessly shilling on Twitter accounts, so apologies for that. But I will continue doing it until June 25th. So just be prepared, because I think the summit will just be immaculate vibes in DC, downtown at the Ronald Reagan International Center, a very large venue to really accommodate what we think will be a marquee event, planting Bitcoin's flag in America, and moving from rhetoric to action. Right, that's kind of the tagline here. We've had a lot of encouraging pro-Bitcoin policy announcements and even policy moves with the Strategic Bitcoin Reserve. Now the question is solidifying those gains, expanding the frontier of what's feasible policy that we can get executed at both the executive and legislative levels. And we're going to be bringing together a kind of unique constellation of individuals representing, folks that are experts in Bitcoin industry, Bitcoin policy, bringing them together with national leadership from Congress, from the White House and the executive branch. We'll also bring in sort of non-traditional participants from sort of the DC think tank ecosystem, right? Because Bitcoin is now not just a niche sort of crypto policy issue. It's seen by the White House and increasingly so across the world as a strategic asset. And that is going to have spillover effects and interdependencies with a large swath of other traditional policy domains, whether it's international relations, the broader macroeconomic kind of policy making, human rights, financial inclusion, financial technology regulation, the energy system, AI. So these are all converging topics, and they're converging in and around Bitcoin. And Bitcoin is going to increasingly play a role in all of them. And so we see our summit as really trying to advance the conversation and get all the key people around the table and really just also have a good time, right? We're going to be opening up PubKey with BPI's office inside, and so we're hoping to kind of christen that as a sort of the Bitcoin embassy in DC. And now that DC has decided to move pro Bitcoin, we need to kind of bring Bitcoin to DC, and so we're kind of going to do both. And so really, if you're going to think about one conference to go to this year, that's not the traditional kind of like, okay, let's have a bunch of mood boys on stage doing kind of panel jibber jabber. Let's have like serious policy conversation with people that are very high signal and high impact that can actually get these things done. I think this is the place to be. So, relentless shilling will continue, always be shilling. And I think it's for a good purpose. We have a limited window, I think, in the political calendar. And I think our event, we want to sort of act as a catalyst to drive political momentum and industry momentum on Bitcoin policy specifically. Bitcoiners looking at the broader landscape of crypto policy, might be resigned to see, okay, a lot of momentum is behind market structure and stablecoin bills. And those certainly have a lot of legacy kind of inertia kind of in the crypto industrial policy ecosystem. We exist to bring Bitcoin up to that level of salience in the conversation, and events like this are critical to doing that and sending that signal to policymakers that Bitcoin and Bitcoin specifically are just as important, if not more important, than these other sort of hot topic kind of legislative priorities. And so I think it's a matter of capturing that momentum and regaining policymaker attention, and amidst lots of other things that would otherwise, take their eye off the ball, right? There's chaos on any given day in DC, and so these events are really good forcing functions. So, and you get to meet people that maybe you would not otherwise meet before at events, in DC that bring a lot of different people together. And so, really, the last two were, going from strength to strength, and I think this is going to be the best one yet. So be there.
Zach, why are you excited?
Um, here's my pitch for why you should come to the summit. I think it is no secret to folks that we are in a moment in Bitcoin and to some extent sort of the broader digital asset space where policy is sort of the main show that's going on. And you can see that even in the non-policy specific conferences. It's a race to see how many politicians you can get, how many panels about policy you can have, et cetera. And like Matt said, this is sort of a unique moment in time to crystallize the ideas that a lot of us have had for years into actual policy and sort of drive the story forward. For those who've not been to a BPI event before, it feels very different than these general purpose conferences. We're really focused on policy. The crowd that's there is different. It's much less about companies sort of selling stuff or, price predictions. And in some ways, it feels less like a podcast, although admittedly, maybe a bit more like this podcast. And it really is, truly sort of high signal. And so for folks who come to DC in June, I think you'll get a couple of things. One is, our program really is about like, what does good Bitcoin policy look like? So you'll hear the full sweep of our sort of issue areas across every part of the Bitcoin network. How do we feel about mining and energy policy? How do we feel about technology and innovation? How do we feel about Bitcoin, the asset, and how it plays into economics and geopolitics? I'm especially excited for panels about human rights and the impact that Bitcoin is having abroad, spreading financial freedom to places where freedoms are scarce in general. So in terms of like bang for your buck and in terms of what you'll learn for a one-day conference, it's going to be pretty remarkable, and you will come away just much smarter on what does Bitcoin policy mean. And then you'll also be there with the people that are moving policy forward, right? This is, I think, the closest you can get by just coming to a conference to being sort of literally in the room where it happens. The discussions that come out of these events are incredible. We had sort of a smaller version of this year with Bitcoin for America, which was focused specifically on the idea of SBRs. But this is going to be sort of the full sweep of Bitcoin policy. And it's just an incredible conversation. And so I've said this on Twitter before, but I really do think this is going to end up being sort of the highest signal Bitcoin focused event of this year. And I don't know that there's ever going to be, another event quite like this one, right? We're going to continue to do summits and try and make them bigger and better. But with this group of people in this moment with this event, I think like this is a moment in time where almost anyone who cares about Bitcoin who shows up is going to get a lot out of it and really is just going to remember this forever as like this was the sort of fulcrum of, how does the ideas behind Bitcoin and the opportunities Bitcoin presents diffuse into sort of the centers of power.
Amazing. All right. I want to parlay this shill here into the actual topic for today's conversation. There's been kind of a debate, you might say, or maybe a kind of topic on Twitter surrounding the sort of legislative priorities in DC, right? To lay the groundwork here, right? We have the Strategic Bitcoin Reserve that kind of takes the form primarily of Senator Lummis's Bitcoin Act and then Congressman Nick Begich's companion act in the House of Representatives. And then we also have kind of like crypto market structure, broadly speaking, that's kind of a question of how do these other cryptocurrencies get classified by the executive agencies for regulatory purposes. And there's obviously more nuance than that. And then we also have the kind of stablecoin question, right? And I think we came out of the Trump admin early days. We were sort of very well positioned with the Strategic Bitcoin Reserve, right? We got the executive order. It looked like the momentum was kind of really on our side. And now I think there's a growing sense that the other two sort of legislative priorities are moving up in the world. So I think, the question that's going to broadly frame our conversation today is why is the Strategic Bitcoin Reserve why does that need to be the number one priority? Why is it more urgent than the other ones? And what are we doing to kind of make that happen? So, Zack, you put out a tweet kind of earlier this week that basically was like, hey, this is urgent, the other ones aren't. Why do you say that?
So I mostly, I think, want to let Matt make the case for this, because a lot of the answer to that question has to do with geopolitics and game theory, and that's really sort of the core of his research area. But let me make his job harder first and make the case for the other two and sort of explain what these priorities are, because I think the full conversation and sort of the fallout from the tweet that I had was I ended up defending that these other two bills are real and they're needed, which not all Bitcoiners feel the same way. So the other two bills, I think the answer very quickly why they're moving up in the world from a political perspective is because they sound less controversial. So first, we have the stablecoin bill, so federal stablecoin legislation. There are two draft bills. There is the Genius Act and the Stable Act, and they are meant to create a federal framework for how you can have federally regulated stablecoins. So the most important parts of that from a legal perspective are, okay, if you're a stablecoin issuer, what kind of licenses do you need? Do you need to be a bank? Can you be a non-bank institution? What sort of regulatory hoops do you need to jump through? Second, once you've jumped through those regulatory hoops, what collateral? So that this act deals with actually sort of collaterally backed stablecoins rather than algorithmic stablecoins. But for a stablecoin that's backed with collateral, what kind of collateral suffices? Does it need to be one-to-one? Can you have short duration paper, right? Short T-bills. Can you have long duration paper, longer bonds? Can you have other securities that serve as collateral these assets? Can you have Bitcoin serve as collateral for stablecoins? So that's the other sort of big issue. This comes from a lot of doubts over the years, specifically, I think from Wall Street types about Tether. Has it been fully backed by enough dollars or treasuries that if everyone wanted to redeem their Tether tokens for actual US dollars in a bank account, is there enough to go around? And how do you prevent a bank run on these assets? And then the third big area is around illicit finance, KYC, AML. So if you have a stablecoin operating in the United States or abroad, under what circumstances do you have to KYC people, right? Is it just at creation and redemption of the stablecoin? Is it when there are certain secondary transfers? So, it's one thing if I'm going to Tether or Circle, I'm giving them dollars and I want stablecoins. What if I'm sending stablecoins to Matt? Do I have to KYC him as part of that transaction? What if law enforcement comes to me and they say, hey, we think Matt's a sketchy guy. If you give them to him, we're going to freeze it. They go to Coinbase and they say, all right, we need you to freeze the coins that Matt puts on. Under what circumstances do the stablecoin issuers have to participate, with law enforcement in those types of actions? And so all this is sort of laid out. Now, there are some folks out there, I had a back and forth with Marty Bent about this on Twitter, who say, actually, stablecoins are working fine now. Why do we need any of this? And I think to some extent, that's a fair point. I actually think stablecoins are working fine now. In my work, I accept stablecoins. I think right now they're just better than international wires at everything that international wires do. However, big institutions don't want to get involved with the stablecoins because they feel like they don't have enough regulatory clarity. And so, if you are PayPal, I think they have a stablecoin, but they haven't really rolled it out in a big way. If you're one of the big credit card issuers and you've got a payment network, do you want to replace some of that infrastructure with stablecoins? Well, you probably wait for a bill like this to get clarity. If you're a big bank, if you're a big asset manager like BlackRock. So I think the main sort of practical policy unlock of the stablecoin bill is it allows the traditional financial system to get into crypto and start using crypto rails. And whether that is a good thing or not depends on whether you think stablecoins are a good thing or not. Some people think it's great, it's good technology, it's a Trojan horse for Bitcoin. Other folks think that this is essentially a privatized version of a CBDC. But in any event, it is this interesting situation where you've got traditional finance really wants this bill passed because it'll allow them to compete with the crypto native companies like Tether and Circle. And there's a lot of political will and a lot of money behind that. And if you're in Congress, you're like, oh, yeah, dollars on the blockchain makes a lot of sense. Like, we like dollars. We want dollars to proliferate globally. So this seems like a thing we can get behind. So that's the stablecoin bill. The market structure bill is specifically around the question of what financial regulators, and we have sort of two primary ones that matter here: the Securities and Exchange Commission, the SEC, and the Commodity Futures Trading Commission, the CFTC, who regulate securities and commodities. Asterisk there. The SEC regulates certain futures, and the CFTC regulates certain futures, and it gets a little complicated there. But which of these regulators have jurisdiction over which part of the digital asset ecosystem? This sounds like an incredibly boring question, and I think to most people it is. Again, this is something I deal with a lot. I have a sick fascination with it, but it gets like super duper in the weeds. The reason this matters is because our securities laws, like the important ones, were written in the 1930s, right? The two most important securities laws that impact stuff people might want to do in crypto are literally the 1933 Act and the 1934 Act. And as you can imagine, in 1933 and 1934, people were not really thinking carefully about what a lazy llama NFT should be classified as under the security laws, and they just like weren't in a great mood about securities because we had just come out from the Great Depression. And so these rules are pretty strict and limiting in certain circumstances, and arguably not up to the task of digital securities and commodities that move on peer-to-peer rails using blockchain. And so the problem is right now, if your cryptocurrency, if your token, right, whatever that token represents, is legally a security, there's not much you can do with it, right? There's all sorts of securities laws that basically prevent you from offering it to retail. And so then you have to make a convoluted argument that somehow the offer and sale of your token isn't a security. But then the problem is there's this Supreme Court case from 1946 called Howey that makes almost anything you'd want to do with a token that has value into a securities offering. And so it's this real mess where basically all the things people want to do with blockchain and crypto, like issuing royalties to entertainment, whether it's movies or art or whatever, music, or offering tokenized real estate that pays out dividends from when someone pays rent in the form of stablecoins, or tokenized shares of companies. You really can't do all of that, and instead you need to issue tokens that you can get a lawyer to say aren't a security. And so these things are pretty neutered, right? They look like meme coins that don't have any fundamental value. They look like utility tokens that by and large are basically like Chuck E. Cheese tokens or Subway tokens for some piece of infrastructure that nobody's using yet, because you can't really incentivize people to use the infrastructure because that would create a securities offering. Or they look like DeFi governance tokens that don't really give you a cut of the DeFi revenue. So these are pretty bad products. It's created this terrible malinvestment situation where at least tens of billions of dollars have been invested in crypto VC, and we have basically nothing to show for it. And so this is a bad situation. And so understandably, all the crypto exchanges, the VCs, the issuers, they all get together and they say, listen, we need to sort out this mess. The future of finance is on chain, and we're just not going to be able to do this until we have a market structure bill that modernizes the securities laws. So that is setting the table for what these other two bills are, why people care about them, why there's a lot of big money interested in it. And so now I'll kick it over to Matt for the sort of hard work of why are both of those less important than the SBR?
Yes, I'll frame one, like the political economy context for the situation that exists inside DC. And then two, I'll kind of give more the normative kind of pitch or take, right? So the first is just, well, one, like there's no, CEO or board of directors for Bitcoin, right? There's no advocacy group or lobbying shop that is directly advocating on behalf of like Bitcoin as a corporate structure. There are numerous such entities explicitly doing those sorts of things with large amounts of resources for exchanges, for custodians, for venture capital funds, the whole litany of folks that are actually like incorporated entities, with a large equity stake or vested interest in the success of different parts of the digital assets industry. And so the way the policymaking apparatus operates inside DC is like politicians want a regulated industry, or they want to execute certain policies, and they want to go, okay, well, who in the industry can I talk to, or who has a stake in this that I need to talk to? And those are very clear structures to sort of map onto, right? These are the people that you invite to working groups. These are the people that come visit your offices. These are the types of people that write checks for campaign donations, right? And so there's like a well-worn kind of political economy ecosystem and set of practices and norms that the crypto industry has sort of adapted into. Bitcoin is a leaderless, global, decentralized, open source software project. It has a lot of industries attached to it that have an equity stake in it. Bitcoin miners, exchanges, even Bitcoin development, supporters. So there's lots of folks that are semi-organized in different ways, corporately and nonprofits, to try to advocate for Bitcoin. But by nature, it's a leaderless protocol. And so there isn't necessarily that coordination, that unity of focus and effort to advocate for Bitcoin specifically. There's a lot of people that benefit from Bitcoin's success, but they have a much more as a business incentive to advocate for a particular type of regulation that affects, as Zach was mentioning, their business model, right? And so we're in this situation where, you have a kind of a Pareto distribution in the other direction, right? Where maybe, Bitcoin is 60 some percent of the total market. If you actually throw away a bunch of trash, it probably is like 80, 90% of the total digital assets sort of market. And yet I'd say the amount of advocacy and lobbying in DC is probably flipped the other way, right? Probably 80, 90% specifically for crypto on these things like stablecoins and market structure, and maybe 10 to 20% on Bitcoin specific issues. That's kind of BPI's existence is that 10 to 20% is basically trying to carve out and expand that niche of advocacy that we think is of the most strategic impact, not just to the digital assets industry, but to what we view as this shift taking place on both the technological and geopolitical kind of foundations of the global system. And so this is maybe then the segue to why I think the SBR and other Bitcoin specific policies should be, equally important, if not more important than these existing policies. I understand there's a lot of political capital that's been invested in the success of these bills. And I think right now, just speaking very pragmatically, all the indications are the White House wants to get these things done before August to deliver the president a legislative victory, and that there's a lot of sunk cost, intellectual and lobbying capital and personal time and energy has gone into formulating these bills, fighting over them, crafting them, moving them through the legislative process. And because they think that they're close enough to the finish line, it's very hard to argue that they should just give up on it, right? And so I think that's just not practical, or that's not a pragmatic reading of the situation. So practically and pragmatically, I would expect stablecoins in particular, right? Those are going to come out very soon. The market structures, close behind, although we'll see, there's lots of folks now coming in, to try to angle it in different ways. But at least from the White House and the senior leadership in Congress, the clear intent is to try to get these done before they move then, theoretically to more Bitcoin specific policies, like say codifying the SBR. And normative argument for why when they should not lose track of Bitcoin specific policies, but also why they should maybe even, front load them as part of this larger conversation around sort of three legs of the sort of the crypto policy stool, is one, Bitcoin is the foundational asset for the whole thing, right? It's the most important thing. And so I think if the US government is going to make good on its rhetoric of being a Bitcoin superpower, if it's going to make good on its rhetoric of shifting in a pro-Bitcoin direction and thinking about Bitcoin as a strategic asset, you would want that to be reflected in your legislative priorities, right? If the White House thinks that Bitcoin is a strategic asset that's going to be critical to 21st century strategic advantage, well, an executive order is not necessarily going to survive the next administration. And so you have to codify it in law. You have to codify that and maybe other things to instantiate these commitments. And then the matter of urgency, right, is the executive order that was signed, not too long ago, was a starting gun that was fired. And that set off a kind of a quiet race. And I think that race has been accelerated by all the tariff uncertainty, where the world is now looking and reappraising the set of assets, especially capital pools that are controlled directly or indirectly by large sovereigns. We're talking trillions and trillions of dollars that are now, repricing the future in various ways. And there's a huge amount of uncertainty associated with the sort of shifts of the geoeconomic system that's now in motion here. And the historical pattern of such shifts is that when you have an indebted status quo hegemon, it decides to essentially rug the legacy system because it feels like it's no longer serving its strategic interests. And it looks to impose pain on the participants in that system that it has, coercive leverage over, right? That's what you're seeing right now. It's just like the US hegemon trying to sort of rug the system and then trying to find kind of, case by case, who can it kind of impose that pain on, right? These are like country specific trade deals, talk about new currency agreements, and the market is sort of reacted by moving into harder assets. So gold has taken off, and then you've seen this very interesting, everyone's looked at decoupling with Bitcoin, but the fact that it has kind of held up dramatically more relative to other equity and risk on assets. So there's kind of a risk off premium being sort of increasingly priced into Bitcoin, which is highly suggestive of, okay, thinking about long-term scenarios or even medium-term scenarios for Bitcoin's appreciation in a world of increasing fragmentation, increasing geopolitical risk, increasing monetary sort of foundational uncertainty. People are going to look for harder assets to sort of stabilize themselves. And Bitcoin, I think, is going to increasingly become an asset that plays at that geopolitical level. And so we're in this era of kind of that message hasn't quite filtered through, right, to a lot of the policymakers, because these conversations are happening very much, I'd say, behind the scenes. And when these sorts of strategic shifts happen, often they're led by like tiny numbers of people in like back rooms where they just decide to like rug the legacy system. They want to surprise the market. And there's an inherent tension between those sorts of dramatic overnight weekend sorts of moves and like long-term policymaking that you do in a democracy. But I think there are things like a Bitcoin reserve that provide asymmetric resilience and upside for the United States in an environment of policy-induced and geopolitically induced uncertainty. And if you are just looking at the scenarios in the future and see, all right, our policy choices and maybe the reactions by other countries and other investors are likely to lead to an increasing demand for harder assets, in particular, say, gold and Bitcoin. And then you as a U.S. policymaker have to look at that possible scenario and say, which of those is better for your U.S. interests? Is it better if the U.S. helps gold monetize or Bitcoin monetize? If you just run the numbers, roughly speaking, if you add up Bitcoin ownership across ETFs, government holdings, TBD pending the audit results, and then individual ownership, we maybe have upwards of 35% of the total available Bitcoin supply. Do the same analysis for gold, above ground gold, we probably have about 8 to 10% of the total gold supply. So if you just play that out, you could see a scenario where we get like asymmetric leverage upside for Bitcoin's monetization. The other key point is, I think there's a lot of non-linearities associated with this, right? Which is these sorts of systems, especially the US-China competition dynamic here, is there was like my sort of mental model of it was you had Greco-Roman wrestlers, and nobody thought the match was going to start. They're on opposite sides and everything's calm and peaceful, and then all of a sudden they run at each other, and there's like a smack, right, as they sort of first collide and then start to grapple. And that was like Liberation Day, right? And then now they're in a grapple. They're in a grappling where it's like not much is changing like visibly, but there's immense pressure, right? Forces being applied to each other that are, only really being felt by those participants and folks that are kind of exposed to the little elbows flying around, right? And the thing about that type of dynamic is it's highly nonlinear, right? The nature of Greco-Roman wrestling is it's trying to find those little points of leverage where you can shift the center of gravity, you can try to sweep the leg, or you can overpower the person in a certain direction. So you're just constantly shifting these different vectors of influence and pressure. And the visible for the spectators are just trying to model out, okay, in any given second, who's about to flip or who's got the advantage. And that's why you see all this jibber jabber about who's got the highest pain tolerance between US and China. But it really is like a head-to-head, Greco-Roman wrestling match between the two great power, that dominate the global system. And so whatever you think about what's going to happen is going to be downstream of that. And that can happen quickly, right? You never know who's going to, people make arguments for this guy's got this extra bit of, special moves, or this person's got a weak knee, et cetera, right? You can argue that to the cows come home. But when you actually throw those two heavyweights together, things happen. Like it's chaos, right? There's all sorts of things you'd anticipate. You actually have to see how it plays out. So I'm looking at this from the perspective like a national security risk manager who looks at these different tail risk scenarios. And like, we just decided to like get into this fight. And we have a lot of potential vulnerabilities that maybe we weren't sure how they match up against our adversary, but we decided to go in. And so I would, in that scenario, look for any sort of asymmetric upside, any sort of like, ace in the hole, or at least thing that I could sort of put on the table that would be non-traditional that I wouldn't normally do if I'm just like chilling out, before the match, sipping my tea. right? Now I'm in the fight. I need everything that I can wield that's going to advantage me relative to my rivals. I think Bitcoin is a clear like advantage on our side of the ledger. So I think it's a matter of urgency, given the fact that we've basically declared total economic war with China. We're now effectively embargoed, right? Sort of Chinese goods. We're now escalating into tit for tat currency war, supply chain restrictions, rare earth, weaponization. So it's like we're starting to pull out lots of more weapons from the drawer to use. If I'm mixing metaphors now, we're no longer Greco-Roman wrestling now. It's like a street fight. And I think Bitcoin is like one of those, aces up our sleeve here. So the fact that policymakers are kind of distracted, I wouldn't say they're focused on kind of this longer running kind of policy process that has a lot of inertia. And I think they want to just get it across the finish line. They haven't quite caught up to the strategic urgency that was like first declared by the, signing of the executive order, Strategic Bitcoin Reserve, then very quickly made more geopolitically and geoeconomically relevant by Liberation Day, and then the cascading consequences now throughout the global system. And these things can happen very quickly. And so I think we can just wait a year to sort of get back around to Bitcoin policy, right? Like this is happening now. Countries in the Middle East and Asia are like very much paying very close attention to our Bitcoin policy, and they have maybe the flexibility to move faster than us. So if we're going to embark on a legislative process on, establishing a Bitcoin reserve, we have to kind of start that sooner rather than later.
So I would say, aside from the geopolitical and national security argument, which is, I think, a totally valid and important reason why the United States should prioritize a strategic Bitcoin reserve, I want to give my brief pitch to sort of the crypto community and the crypto policy folks as to why they should see more urgency for the strategic Bitcoin reserve relative to these other legislative initiatives. So first, I want to acknowledge the sense I think that Matt brought up, that like there is a limited time window to get crypto legislation done, right? And there is at least a perceived scarcity of like we can get a couple things done, then there might be lame duck for the next 2 years, and so like this is the window. Okay, understood. But let's first talk about the downsides of each of the two other legislative initiatives. So, okay, stablecoins seem great, right? In my view, it's the only thing other than Bitcoin that's found real product market fit in the digital asset space, and great to have a bill that codifies that and cheerleads that. But you crypto companies, do you really want to compete with TradFi on this before your rails are set up, right? From a policy perspective, do we want a world in which the dominant blockchain might be some private blockchain run by BlackRock instead of Ethereum or Solana or wherever you've been investing resources for a long time and thinking about these issues from a cypherpunk perspective, right? Do you want to run the risk that this ends up being a centralized CBDC-like system before you have the time to decentralize it? You might want to have a little bit more time before we decide that question. Similarly, on the market structure bill, like I understand that it's really hard to build stuff of value in crypto right now. But I can tell you, as someone who occasionally practices the dark arts of crypto law, crypto lawyers don't at all agree on what should be in the market structure bill. There are very different versions of market structure bills out there. Fit 21, which was largely written by Coinbase and the like, is really favorable to the VC/centralized exchange world, less great for DeFi. The Lummis-Gillibrand bill is different. There are other proposals out there that are more friendly to DeFi. There's huge controversy about what role, if any, decentralization should play in the securities law status of tokens. And so, it might be, if we get one shot at market structure, let's take a little bit of time to get our house in order. Now, turning to the SBR bill, what would be the immediate effect for the crypto industry of the SBR bill getting passed, right? You take Senator Lummis's Bitcoin Act. Well, the first thing that is going to happen is the Bitcoin price is going to go insane. Whatever target price you have for this cycle, you think Bitcoin is going to 200,000. Well, that's going to at least happen overnight. And, probably Bitcoin is going to like $1 million in short order. That is going to get everybody's attention. Everyone is going to be talking about Bitcoin and crypto. And that's going to make weather for you, right? Like if that happens and all of a sudden people are talking about the new digital gold rush, now, regardless of who gets into power in Congress and the Senate in 2026, you have a much better shot of taking the time and actually getting other digital asset legislation passed, including regarding stablecoins, including regarding market structure, and then I hope we'll have some time at the end of the show, including around the distinction between custodial and non-custodial tools, that will now become a bipartisan, much more urgent issue just because of the capital inflow to Bitcoin that America declaring, beyond what we've done in the executive order, not just a strategic asset, but something that, we're going to take a meaningful stake in, right? So Bitcoin going to 1 million, number go up really is good for everyone. And I think really changes the conversation in a way that is, better for the rest of the crypto space. And it will buy us the time to get stablecoin legislation and market structure legislation done correctly and not just fast. And so I think that eliminates some of the scarcity. Now, play it in the other direction. Let's say that we don't have the right sense of urgency with the SBR bill. The potential other consequence that I think Matt was alluding to is like, what will happen to crypto policy, including stuff like stablecoins and market structure, if Russia or China announce they've been stacking Bitcoin? They've realized that Bitcoin is better gold than gold. They've been stacking Bitcoin more than we have. They're moving to a Bitcoin standard. What do you think the legislative and regulatory response to that looks like? Do you think that's going to be good for all of the open networks you're building? Do you think that's going to be good for DeFi, good for the network state? No, like that's going to be really bad. So the upside of this, the giant capital inflow, the giant gold rush that the SBR bill getting passed and Bitcoin going to like $1 million a coin, giant tailwind for all of the crypto priorities on Capitol Hill. Conversely, being late to this and having Bitcoin seen as a threat by policymakers is a giant headwind. This sense of like, all right, we only get a couple shots at this. We're only going to get 1 or 2 bills across. And so it needs to be mine. I actually think is relatively short-sighted thinking and is going to end up with worse policy, both in terms of the actual substance of, for example, the stablecoin or market structure bill that gets passed, but also it's just a less, it's a worse political environment in which to try and move those bills forward than you'd have if you started with the SBR and sort of the golden bull run for Bitcoin.
Okay, great. Yeah, both very compelling reasons, or maybe more than both. But I think one thing that's been or sort of caught my attention, right, is Bitcoin Magazine got the chance to interview Howard Lutnick and Bo Hines last week, and I think both of those interviews will be public by the time this comes out. But one sort of like common thread between the interviews was this notion of kind of like the Bitcoin space race, right? And I think Pines, you've been talking about that. I know you had a presentation in the Middle East about that. It seems like the White House is very kind of tapped into this, right? They're aware that Bitcoin, there's a hard cap on it. If our adversaries kind of move quicker than we do, we risk falling behind. What's it going to take to kind of get Congress, into that same kind of headspace? Are there incentives different? Why are we sort of like seeing this particular divide here?
Well, one, when things get serious, right? Like the circle of folks that are read in gets smaller and smaller. And so, I've been, obviously closely watching kind of the week to week evolution of kind of the White House's disposition and announcements and commentary on Bitcoin policy, ever since the election. And it's kind of this wavering of like, it's so over, we're so back, right kind of meme. And there's things that you can kind of interpolate from public things, but then there's kind of like the whispers and rumors and whatnot behind the scenes, and you're kind of existing in the superposition of they're kind of ignoring it, and it's kind of like they pat everyone on the head with the SBR EO, to actually there's people like well tucked away that are very closely studying this stuff and are putting like a lot of bureaucratic energy into white papers and memos and like analysis of budget neutral ways of acquiring large amounts of Bitcoin, and that you kind of have to reconcile this right at the same time, kind of the sense that if they were going to go hard in the paint and acquire significant amounts of Bitcoin, you could bet your butt they wouldn't be talking about that, right? They might even be downplaying. They would be sending the opposite signal in public, right? And so they certainly wouldn't want to, publicly lobby, or even kind of side lobby the congressional leadership to kind of back an SBR bill, because that would kind of give away their hand, right? And so it's kind of been this superposition of, are they just not prioritizing it because they want to get these two other bills done, or has it kind of moved beyond kind of the normal kind of crypto policy circles, and now it's a national security issue, and that's being worked in a sort of a separate channel, and then only when things are ready to move will it become apparent, right? And I think there's reason to believe maybe both are happening right at the same time, because I think we're in this era, especially post Liberation Day, where things that were more hypothetical or theoretical are now very much practical, and like policy oriented, and there's just been a huge churn of uncertainty, even inside the White House, even inside the executive branch, and in Congress in the last month or so. So I think Bitcoin is just in the order of priorities has just been knocked down, right? But I think it's like it's a balloon, right? It's kind of pops back, or it's a trying to put a balloon under the water. It's going to pop back up, and I think it's in the process of popping back up. I would expect over the course of the summer, especially around say the August timeframe, that's sort of my expectation. You will see a more decisive pivot from the White House's perspective on the strategic impacts of Bitcoin, right? I think that's their target for the signing of some crypto bills. So according to their own calendar, they will have those done and a signing ceremony. And then that kind of gives them a few months to kind of put their internal plans in motion on budget neutral ways of acquiring more Bitcoin. Now, I haven't seen the Bo interview that's about to be released, but I would expect he's going to say things like, we are looking at very creative ways of acquiring as much Bitcoin as possible without imposing an incremental burden on the taxpayer. And I think when that first, came out as language, people were very skeptical that could mean much, right? Could it just mean a trivial acquisition by swapping existing, non-Bitcoin crypto assets that don't touch the dollar? And we talked about this in previous podcasts. But I don't know. I think that there's a lot of ideas on the table that are more substantial than that, like vastly more substantial than that. Now, how much they can go public with those is an open question. And so I'm very interested to see how this divergence maybe takes place, because on the assumption that the U.S. government is going to acquire significant amounts of Bitcoin in budget neutral ways using all of its clever tricks and creative means that they can identify, now that the White House has given this instruction to the Treasury and the Commerce Department, what will be publicly discernible from that, right? And how would we know? And importantly, like, what would that mean for the engagement with the folks on the Hill that are trying to craft legislation to sort of codify that, right? And of course, we talked about the gold certificates as like one mechanism there, and that's among the more significant things you could pull out of the hat to acquire large amounts of Bitcoin, as well as do other things to sort of help the U.S. government's fiscal position. But I think, stepping back, I think this year will be a transformative year for Bitcoin policy, but nothing is guaranteed, right? And it requires, individuals and groups keeping a very close eye on the ball, and not getting distracted by other things, and not getting pulled into kind of what we think is second order priorities. Like, there's a matter of strategic urgency here. And Bitcoin moves very non-linearly. I say that again, but like, Bitcoiners are used to this, but then they kind of forget it, right? And now we're in an era of nation states, and that takes the nonlinearity up to a whole new direction, right? So you could have scenarios, and I'm going to like out bullpost Zack here, right? He's talking about $1 million Bitcoin, but like, if we're in an era of this, grand reset of the global economic, financial, and political order, and geopolitical order, then and if in that scenario Bitcoin becomes sort of de-risked as a sovereign asset, as a neutral reserve asset for global capital, then like $1 million is the floor, as David Bailey would say, right? We're talking like vastly higher. And obviously that's moon boy math for Bitcoiners, but it has critical strategic implications. Now you're talking about Bitcoin, reaching and then surpassing parity with gold, and that could happen, in the next 4 years. And that downstream implications of that, are vastly more significant than a market structure bill, vastly more significant even than stablecoins. And stablecoins, I think, are very important. I think the bullish forecasts are, potentially $3 to $4 trillion of stablecoins by the end of the decade, maybe more, maybe $5-6 trillion of stablecoins, which is a 40% CAGR, which is dramatic, but essentially just dollarization of sort of mostly non-dollar offshore balance sheets on crypto rails. And so there's a lot of stakes there. But I think those are the strategic stakes of stablecoins. But if you're talking about Bitcoin monetizing to reach parity with gold and exceeding gold, then the strategic implications are vastly more significant than even stablecoins. So if I'm like racking and stacking the strategic implications with like a 3 to 5 year view, it's like very clear: strategic Bitcoin reserve, then stablecoins, and then market structure. And I just don't think that that strategic view is informing kind of the tactical policy debate right now, but it should.
Okay, great. So I'm going to shift gears a little bit here. I think we kind of covered why the SBR is priority number one. We've seen another sort of major shift in maybe the past week or two, particularly from the Department of Justice. There was a memo that got released from one of the higher ups there, and the byline was ending regulation by prosecution, right? So during the Biden administration, one of the sort of like leading threats, I would say, to our industry and to the crypto industry more broadly was these attacks. I think is probably the right way of saying it, from the Department of Justice on basically people writing code. This basically strategy of finding cases where the defendants had maybe had a storied past, you might say, but broadly speaking, we're simply writing code. And then putting them on trial, and this had chilling effects, right? We saw Phoenix Wallet leave the United States after the Samurai Wallet indictment. This was kind of a massive threat to our industry, and just in the past couple of weeks, we've seen that start to unwind. So, Zach, can you take us through what that memo said, and then if you want to dig into what's going on in the Samurai case, feel free.
Yeah, so to set the table, I think this is almost a mirror image of the conversation we were just having, right? Like, what is the best thing that could happen to Bitcoin? It is that all of the most powerful players in finance and government around the world sort of realize that this is a neutral, aligned asset that we should all get behind. And then the price goes to a bazillion, and people sort of understand Bitcoin in the way we have. Great. What is the worst thing that could happen? And to understand the worst thing that could happen, I think you need to go back to the formation of Bitcoin, right? Like, why did it matter that Satoshi solved the Byzantine generals problem, that you were able to have, for the first time, digital peer-to-peer transfers that didn't require any trusted intermediary? A big piece of that actually is a legal question, right? If there is a throat to choke, it will get choked. We saw that with eGold. We saw that with DigiCash. We saw that with prior attempts to do what Bitcoin did. And it is the peer-to-peer nature of Bitcoin that there isn't a company you can go after and say, okay, this company is subject to the Bank Secrecy Act and our whole sort of web of regulations around money transmitters and money service businesses that allowed Bitcoin to thrive. And by the way, the sort of biggest opponents of Bitcoin, chiefly among them Senator Elizabeth Warren, understand this. And Senator Elizabeth Warren has this bill called the Digital Asset Anti-Money Laundering Act, which is a ban on self-custody. So this is like the worst case scenario for Bitcoiners, is that, you can't really ban Bitcoin at this point, but you could ban Americans from using self-custody tools, make it a crime. And Elizabeth Warren tried to do that. And the instrumentality she used to try to do that is this DAMLA bill. And it basically says that everyone in the Bitcoin space, whether you run a node at home, whether you develop software for a self-custody wallet, et cetera, you are a money transmitter. And even though you can't, miners too, even though you can't KYC people because you don't have information about them, you have to. And therefore, it is sort of a backdoor ban that she can pretend isn't a ban. Thankfully, I don't think at this point in time there's a lot of energy on Capitol Hill towards these approaches. However, the biggest real threat to Bitcoin, not just in the prior Biden administration, but still to this day, is that we sort of get one of these bans in a backdoor way through a federal court decision, right? That is not subject to politics. And this is, I think, an incredibly important arena of policy that is sort of under focused on. And right now, there are these two cases. I think we've talked about a little bit, but one, the Tornado Cash case, and the other, the Samurai Wallet case, where if a judge decides them the wrong way, and we've already gotten some of that in the Tornado Cash case, this could have sort of many of the same effects that Elizabeth Warren's Damla bill would, without any Democratic buy-in and without any law or regulation being passed by the executive or legislative branches. So the judicial branch here is like an Achilles heel for self-custody, for sovereign use of Bitcoin, et cetera. The stuff that we really want to do with Bitcoin. Bitcoin is freedom money. Now, the cases are being brought by the executive branch, right? By the Department of Justice, which transitioned from being under the Biden administration to the Trump administration. So that has caused some of the sort of recent good news that you were just referencing, Zach. So there was this memo from the DOJ that said we are not going to do regulation by prosecution. So there's this term regulation by enforcement, which is sort of predates the crypto space, but definitely came to the fore with regard to the SEC's approach to tokens. They didn't want to give rules about what they thought were securities or commodities. Instead, they just did lawsuits. And then towards the end of the Biden administration, we saw this darker version of this where people were actually being thrown in prison for developing non-custodial software and offering that software. The government will say that offering the software is a service. It's not just speech. But ultimately, whether you view this as publishing software or providing that software, running that software, the point is these are people who are providing non-custodial software where users are moving their own money and not giving that money to the developers who created the software. And if that is allowed to stand as legal precedent in the courts, then miners are at risk and wallet manufacturers at risk, and all of the developers who are making Bitcoin work and making Bitcoin scale are literally at risk of going to prison. Another piece of good news we had this, I guess, just yesterday about this, Monday, April 28th, is a letter in the Samurai Wallet case where after the DOJ memo was released, the defense lawyers in the Samurai case wrote to the government and said, hey, we think under this new policy, you really shouldn't be bringing this case because you guys are doing exactly the thing that this DOJ memo said you shouldn't do, and you should take another look. And both the prosecutors, without agreeing to those statements by the defense lawyers, but both the prosecutors and the defense lawyers then agreed that, hey, we need a couple weeks. We're going to push back all of the briefing schedule to decide the legal issues in the Samurai case so the government can take a long, hard think about whether it wants to bring this case in the first place. So, I don't want to get ahead of ourselves here, but obviously it would be amazing news if the government decided to drop this prosecution in Samurai Wallet. Now, that being said, even if they were to do that, there still is this outstanding, very bad opinion from the Tornado Cash case, where a federal judge in the Southern District of New York said that the Bank Secrecy Act, right, our KYC AML laws, do not require custody, do not require control, can apply to this sort of non-custodial, immutable smart contract software. And so even if, in the best case scenario for Samurai, we need to appeal that, we need to make different case law in the courts. But, this is definitely super welcome news with regard to Samurai Wallet. We'll see where it comes to. If the Samurai case goes forward, BPI is going to be involved. We're drafting an amicus brief to try and make this point to the courts. But the Achilles heel of a lot of what we're working on is this sort of bedrock idea of what Bitcoin and blockchain mean, which is that, the converse of not your keys, not your coins is if you're the one with the keys, you're the one who owns or at least possesses the Bitcoin. You're the one who's moving it. And to treat someone who wrote a piece of infrastructure, a piece of code that you are using to move your Bitcoin around with your own keys, to treat them as if they are moving the Bitcoin for you is just logically and legally wrong, and is going to lead to really bad results. And that's why we saw all of these companies leaving the country out of fear.
Yeah, and one thing I'll add is just the stakes here. It's not just about geopolitics and U.S.-China competition, or about number go up. It's about like a system of values, right, that we think are embodied in Bitcoin as a network and the culture of Bitcoiners. And so the worst thing that could happen in my mind is more like the moral affront, right, to that ethos, and that accommodation to getting number go up comes at the expense of sacrificing like the foundational principles of open networks, open societies, peer-to-peer, a disintermediated interaction, which is now a thing that is feasible in a 21st century digital society, right? Like societies in long past just didn't have the technical capacity to engage in these sorts of interactions and build new forms of institutions. uh, they were reliant on, essentially vertically integrated hierarchical control structures. And that's kind of been the paradigm for most of human existence. And there's been lots of failure modes and destruction and exploitation, I think, from those sorts of institutional constructions. I think we have this unique moment in the 21st century, but it's a fraught moment where there are large forces underway that are trying to like reconstitute a kind of feudal system, reconstitute a techno surveillance state where every transaction, every engagement, every economic activity, even every sort of meaningful personal decision, and access to these, breakthrough technologies like frontier AI models, which will become increasingly integrated into our society, as we talked about in our last episode. Like the stakes are huge in terms of what is the structure of that society and what's the relationship between the state and the individual. And these have been, long debated philosophical and political issues, but I think they take on an accelerating urgency as the technology paradigm accelerates. And so if Bitcoin accelerates in its price, that will bring forward, right, these debates, because now governments will view it as a strategic asset, as they already now do, at least rhetorically. And they will start seeing the network in a different way. And states will then start to try to, wield what reservoirs of power and coercion and control they have over their populations in order to, buffer access to that global permissionless peer-to-peer settlement system. And so we want to get ahead of that, right? Ideally, in a democracy, you can steer the hegemon, right? Like the hegemon isn't this monolith that just sort of imposes its boot on your neck, right? If you're clever, if you're active, if you're motivated, and effective, you can take some of those tools off the table. You can shape how the national power structure is wielded with respect to you and with respect to your political vision. So I think this is why you have to engage. You can't just retreat to your citadels, right? And sort of hope and pray that everything's going to be fine, right? Like, just because you're not interested in the state doesn't mean the state's, not interested in you. And when you go through periods of increasing instability and geopolitical competition, states tend to abrogate more power and control to themselves. And they do it not out of as a sort of malign, oh, I'm just sort of the bad boogeyman at the top of the power structure. It's, seen by them as a national security emergency, right? It's a matter of winning the fight for ostensibly democracy, but to first order just maintaining the power structure. So you have US-China competition heating up that will tend to reinforce the power of the state. And you have decoupling, technological decoupling, KYC on the cloud, increasing use of sanctions and export controls, weaponization of all sorts of economic and other policy instruments. It's going to be fragmenting the world system. And Bitcoin is, going to be one of the few remaining kind of global systems, right? It does not have any border, programmed in. It's just nodes running this protocol. And that is, I think, the most interesting test, but it's also the test that folks in democracies are going to be put to, which is, are you going to stand up for these principles of open societies and open networks and open systems, even as the forces of competition and fragmentation pull things to a national and a federal level. And so, yeah, you have to kind of play these double games, right? You have to play both the inside game, inside DC, at the highest levels of the White House and the executive branch, because you have to understand these are people in these bureaucracies, and they see the world a certain way, and so they make those decisions in a certain way. And but people's minds can be changed, and certain people's minds being changed can have world historical consequences, right? The future is not determined, and just because you have this sort of monolithic system that you think you're embedded in doesn't mean you don't have the power to change it. In fact, there are very high leverage points in that system that if you apply the right pressure the right way, you can shift, that Archimedean sort of lever. So that's what BPI exists to do. And so, yeah, I think we talk at both the kind of very tactical in the weeds level, but ultimately, like we see, because we have such, ambitions for the protocol and the network globally over the next 5 or 10 years, it means there's a huge amount of leverage and there's a lot of stakes, right now to see how these policies get formed. Which is why Policy Summit on June 25th is going to be, world historical. So be there if you want to have an impact on future generations.
Great. Yeah, I think broadly, like the way I see this is the Trump admin has signaled, we're going to embrace Bitcoin, right? We're going to be the Bitcoin superpower. We're going to do all these things to, sort of secure our position as the leader in Bitcoin. And I think doing so sort of like necessitates that this particular legal approach, these sorts of pieces of case law, that these are dealt with properly as well. We can do the SBR, but if people in the US can't run a node or hold their keys for their Bitcoin, right, we've kind of accomplished nothing.
And there are going to be unique challenges, right, about this world where Bitcoin plays a bigger role, right? Like fast forward a little bit, brief history of the future. What's going to happen with Bitcoin? Well, the price is going to go up a lot. Countries are going to take a harder look at Bitcoin and probably adopt it as a treasury asset. It's going to take on bigger geopolitical importance and bigger national security importance. Probably bad things will happen with Bitcoin too. Bad actors, whether they're nation states or terrorists or whoever, are going to use Bitcoin for some bad act. And then the policy apparatus is going to have to respond accordingly. And I think, we're going to have to deal with that. And that is going to be a serious challenge. And, while democracies work really well a lot of the time, we've seen, in our lifetime, for example, with 9/11, how rights can get stripped away when people are afraid. And so, I think sort of just to sum up the conversation we've been having, like, what are the two things you want in place that when we hit these inevitable periods of extreme stress in the future, which we will, what do you want sort of on your side? I think the first is you want aligned incentives. You want the United States to be holding Bitcoin and have an incentive not to do something that will destroy the value of the network. I think that's why the SBR is incredibly important from a policy perspective. But then also you need good case law. And again, going back to our analogy of 9/11, we had more than 200 years of sort of good pro-individual rights case law built up that ultimately served as a check on some of our worst impulses in the war on terror. And it was, of course, imperfect, and we still, maybe did some bad stuff. But the case law was the buffer that we had. And like now is the moment where the relevant case law is being set with regard to Bitcoin, even if the Tornado Cash and Samurai cases aren't going to immediately lead to a ban on self-custody, which is, is a real possibility. It's a remote possibility, but the case law could spin out of control. Wherever it ends up short of that matters, because that's what's going to get cited when these bigger battles happen in the future. And so, like, it's really, in addition to the SBR, really important to keep our eye on the ball with this stuff.
Great. All right. Thanks, guys. That's it for this week, and we'll see you next week.